Welcome to today's morning report on Tuesday the 4th of August with me, Richard Perry, market analyst at Hand Tech Markets. European trading session fairly mixed actually at the open. Started off lower and then rebounded, basically flat now on all the indices. Not too much movement. The big movers around at the moment are the commodity sectors really, and the commodities prices. That is still a big driving story amongst world markets really. You've still got pressure on these commodity prices that we've seen over the last few weeks, and the oil price, for example, falling back. This is on WTI, back to levels once again not seen since March. Big decline in the last couple of days on oil, and also copper as well. Copper's still under pressure, still falling away, and this is having a big impact on market sentiment really. It's still the sort of takeaway from that would be that global demand is in a bit of an issue. Obviously yesterday we had the manufacturing PMIs coming out pretty much disappointingly actually. China, US, both disappointing on their PMIs, and that certainly hit the commodity prices and fell away again. And it's interesting that it is still having an impact across sentiment for markets. Stock markets subsequently were low yesterday. They're basically pretty much flat today because there's a little bit of a rebound, broadly speaking, or slight rebound, certainly in terms of the oil prices anyway. About 1.5% up on WTI this morning. That's also a part of that, I think, is also being driven by the RBA, which came out with its monetary policy today, and it suggested that the Aussie had fallen. Well, it kept rates on hold at 2%, but changed its rhetoric really. The rhetoric in that it dropped sort of further reference to the Aussie falling away, and those falls being likely and necessary. So less verbal intervention really, it would appear to be the case, and less need for jawboning the Aussie lower, because it obviously has coming towards a level at which the RBA seems to be feel it's necessary. So the Aussies actually rallied this morning, and across the board pretty much we're seeing the dollar under a little bit of corrective pressure. And not too much. I mean, it's basically just still buzzing around really. But across all the majors today, the Aussie is slightly in correction mode. But what we have seen is, as I said, that Aussie dollar being the biggest performer on the day. So that in terms of what we're looking at for data-wise, we've got the US factory orders this afternoon being the main bit of data for the day. US factory orders forecast to come in slightly positive again, 1.8% on the month. This is the month-on-month data, and you can see recently that data has not been strong at all. Negative on what's that? 9 out of the last, certainly the last sort of 10 months almost. So an improvement in the data today would be certainly welcome, and would actually be a second straight monthly improvement in the year-on-year data. So that would be interesting. But certainly the factory orders are an important indication of how the US economy is developing. Then into the evening, we've got the New Zealand unemployment data forecast to come in at 5.9, so that would be a 5-month high on that New Zealand unemployment. So that might have an impact across the Kiwi, you'd imagine, this evening. So that takes me to my chart of the day, which is the FTSE actually. Wrong chart. Here we go. FTSE on the daily chart. We've had this broken downtrend, and we've seen now the pressure above, breaking above 95.45, and then 95.45 becoming this key band of support now. Not only that, you've got the 21-day moving average, which has supported all these corrections as well in the past month. So that's now rising up at 95.76, which is obviously supportive of these corrections, and you can see this continued move higher on the FTSE. In fact, can we get a decent uptrend out of it? Yes, we can. There you go. There's a very decent uptrend, and you can actually form that into a bit of an uptrend channel as well, pretty much. So it certainly is running this channel higher now. And look at the RSI on the daily chart as well. struggled to move above 60 throughout the sort of breakout process, and then once it's broken out above 60, it's now using 60 as sort of element of support. So it certainly is momentum improving, and certainly looks to be breaking higher. Now the initial resistance is certainly being tested at 97.20, although on an intraday basis, which is the chart I had earlier, you can see these minor dips that you see the RSI back towards 30, so you might be seeing that another one underway on that. And if you did see RSI back towards 30, I think that would be a nice little buying opportunity. You've got a pretty decent band of support that comes in around sort of 96.30 to 96.40. So I think that there's some pretty decent, actually 96 to 96.40, I would actually say that's actually a pretty decent band of support there. So maybe look to use that. Any sort of retreat into that sort of 40 pip band of support, I think would be used as a nice chance to buy. You've got these big spike lows that find the support and then rally again, and I think that that would be certainly a chance to buy around that 96 level if you've got it. You've had the MACD lines rolling over, turning more corrective, which tends to have been seen in the last couple of weeks as a trigger for these little correction periods. So maybe wait for this correction to play out, find a bit of support in that 40 pip band of support, hopefully, and then start to push higher again and use that as a buying opportunity. So you'd be certainly looking at the 95.20 as your key reaction low. Certainly across the past month that seems to have been the case, but I don't think it's going to get back there. I think it's going to form support around that 96 to 96.40, and then put pressure once more on the 97 at 20 resistance, and then continue to push on through this uptrend channel that we have seen develop in the Swissy. So that's my outlook on dollar Swiss at the moment, and I will speak to you again later. Thank you.